Olivia here from Modern Wall Street.
And I'm Mark from Trading Market Technicals.
And this
is
Talking
Technicals.
What?
Nice, I love it. I love it. Well, today we have a great set of charts, and the requests were amazing. I really got into the charts, and I really looked at a lot of the detail that was involved in the price action. So I'm really excited. Olivia and I went through the whole charts, and we're really excited to really present these charts to you guys.
All right, so last week we identified that this is a current corrective rally in the S&P 500. Because of lack of volume. Now, it did take its 50% Fibonacci, it did take its 50-day moving average, but again, low volume.
Right. Correct.
Lower lows and lower highs action going on here.
Correct. And on top of that, we are now above that 50-day, like you mentioned, a 50 percentile, and of course the 50-day moving average. But the lower volume is a big concern. Rolling over MACD RSI momentum, that means lack of momentum, is also a big concern. That means that this chart is still bearish. It may look like it's not bearish, but it really is. The internals are not telling us anything exciting. And we are approaching a really big area of resistance right here.
Exactly.
Right?
That's the 200-day moving average.
Just underneath that, right. And then on top of it, if you look at the volume profiles to the left, you'll see where we are. We have a ton of supply and demand in that area, which that will deem us a pretty decent sized area of resistance.
The bulls and bears are fighting.
They're fighting.
The bulls and bears are fighting. That's
Absolutely.
an ugly fight.
Oh, it's not good.
And it can get ugly up here, Mark. I mean, you might want to consider, after testing this 200-day moving average, perhaps a short position.
Yes. You know what? I always look at it this way.
Yeah.
Absolutely. I think that if I were to be long, I would be looking to exit longs at that 200-day moving average, or even slightly a little bit above it, and then start to dollar cost average a short trade. Now, because price gets up to that area, right, at 275, 274, that doesn't mean we just go and execute a short trade and exit longs right away, right? We want to see the price actually start to break down and start making lower lows and lower highs, right? So you need a sell signal, right? And that's going to be based on your technical view, and make sure you guys obviously doing your own homework and what your trading plan would be. So if price were to overshoot the 200-day moving average, I would look for a reversal and then look for the market to go lower, and then from there, that's when we start looking for that dollar cost average trade.
Okay, so Mark, let's move on to some of the requests we got.
Yes, I'm very excited. I like these charts a lot. I like the McDonald's chart. Very interesting, a lot of information here. So I'd like to let's get right to it.
Let's thank Stephen Guilfoyle. Stars986 is his handle for giving us this
Thank you, Steve.
ammo.
Thank you.
it's very
excellent
cool.
chart. I'm really excited
So they're
about this.
reporting tomorrow,
Yeah.
and by the way, they're giving away free bacon today from 4 to 5 p.m.
Are you kidding me?
Yeah. So let's see if we can make some bacon on this chart, baby.
Okay, let's do it.
Oh man. All right. So let's see. Consolidated. Since January.
Yep.
We had a major breakout.
Yeah.
On high volume in October. Now, October was a hard month to make a breakout, so that was interesting.
That to me is really a bullish sign, especially in October when the market was selling off.
Exactly.
So this is actually to me, is a real good chart. After the melt up in 2018, we actually broke down, right? From February, and we went sideways for a good 8 months, right? And we did break out, creating this gap area here. So this is something I want you guys to pay attention to, that gap area. And then we actually went up higher going into October and then going into November, and we actually paused right up in this area.
We paused right up in the area, which seems to have made a double top.
Yes.
Now it's on the top of the chart, so that is a double top.
Yes, it's a double top. We actually rolled back down to test and fill that gap, if you can see, right to the penny here. So that's interesting, but it held, creating a higher low from the previous low of the consolidation channel. So that's really, to me, is significant. And also it held on high volume on the pullback. So that I like that very much as far as a bullish chart is concerned.
I think it is a bullish chart.
Yeah.
MACD RSI gaining momentum.
Yep, MACD RSI gaining momentum. We have some volume that's increasing right now the last few days. We did test the double top. The double top obviously failed again. That's okay. Now that with earnings report, the only thing is that we can get a little bit, it's a 50-50 shot, right? I mean, everybody doesn't, you don't want to play going into earnings. I like to let earnings report, let the company report, and then play it afterwards. But this has a very good shot of breaking out.
It does, and if it holds above 189 and closes,
yes,
I mean, this is going to be a real nice base.
This could rocket higher. There's going to be a lot of shorts that are just above that 189 area. You know, they're going to be protecting their profits. There's no question about it. If, in fact, though, we break the 50-day moving average, you have your points here. These are your 3 points of reference for the bottoms for support here, if you are playing this to the long side or you're looking to buy the dip on this stock.
All right, let's move on to the next chart. Thank you to Peter Schur.
Okay.
Our brilliant bond guy. Actually, we've had Peter on the show, and we have talked about GE with him. That is his request. Now, Peter did make a really good point that the credit fears with GE was overblown. So I want to take a look at the technical point of view on it, you know?
Okay, let's take a look at it. The chart's... That's what
okay. It's okay. It's
that's
okay.
exactly what, when I saw the chart. Obviously, being in the market, you're going to see that GE is always, you're going to see what's been happening to the chart. And it's no surprise when I pulled it up last night. It's in a major downtrend from the 32.
It has, yeah.
high.
It consolidated around there, but since 2017, 2018, we have been just in a solid downtrend.
It's been in a big downtrend. I pulled some Fibonacci retracements just to see possibly where can we go to alleviate some downside pressure, right? So from the top of 32 and change, we consolidated there a couple of months. And then we started our downtrend, and we ascended low. And you can see there's a thin zone here, and it went right to the bottom.
Yeah,
and then
went right through that.
Then just broke back down again. So now
this is corrective. I mean, it's on low volume.
Right. Absolutely, low volume. The MACD RSI started to roll higher, but that's just to me, it looks like a dead cat bounce. I mean, to alleviate the downside pressure, Olivia, where we're looking at here?
We're looking at 1388.
Yeah, 1388. That'll take that little swing high out. That's back in when October. Yeah. So right up in that area, that would alleviate some downside pressure. Probably get a short squeeze and go a little higher. This is going to need a really big catalyst, some type of a positive catalyst to get this to reverse. Not that it can't, not that it can't, obviously, but this is still, I think this is still in trouble. And if we take out the lows, I think it's going to be pretty ugly.
It's going to be pretty ugly, or feo, as we like to say in Spanish.
Or feo, like to say, exactly.
But you know what, Mark? I think that we should revisit this chart maybe in 6 months, let it go through some fundamental therapy, as Peter was talking about.
I agree. I think that's a smart idea.
Cool.
I think it's a smart idea. I think it's a great chart to keep an eye on, absolutely. I mean, it is still GE, they're still a player in some of their businesses. I do think that this is something to definitely keep an eye on. Put that 1388 on your radar and see what happens. And if it does get up there, don't forget we need volume and need a couple of good days of closing above that area.
All right, let's move on to the next request.
All right, what's the next request?
Lennar. And no, that's not your grandma Lennar. Lennar is one of the biggest home building stocks on the market and did sell off with the rest of the home builders.
Yes, and also that, the housing market's been weak all of 2018.
Oh, sure.
This is one of my favorite builders. I like Lennar. I like a lot of the builders. When you're looking for value, I'm looking to say, what, is the Lennar going to go away? No, of course not. It has been in its downtrend, again, from the melt up. And then all of a sudden we had that big sell-off back in February, right?
It's repetitive here. Sold off, consolidated. Sold off, consolidated.
Excellent.
Sold off, consolidated.
Absolutely. We had the consolidation and breakdown.
And
consolidation for 8 months and breakdown. And what are we doing right now? But still making lower lows and lower highs, right?
Yeah, and the volume profile.
Volume was big on the breakout. We do have two trend lines here. Right, we have one from 2018 right up in here. And then we have another one here back in December? No, April. Back in April. So we're right now, price is sandwiched right in between the two trend lines.
All right, so if it fails to break out, we would have to fade below the current low of, was it 30?
Yes.
37?
Yes, correct.
37.21.
If it fails, it'll probably retest that, and then we need to see where we go from there as far as price is concerned. I think if it does test that, it'll be really difficult for it to break through. Only because at $39, this stock is just a good company, and I do think that a dollar cost average long trade down here, I think it'll be a gift down the road going into 2019. Now, if we do get that meltdown that we're looking for, right? Obviously, it will have some issues as well. But I do think that this is a good stock to accumulate.
Look, it's above its 20, it's above its 50,
right.
And like you said, it can test this 200,
Correct.
and then we can figure out we have a good strategy plan there.
Yeah, and I think
let it test it a little bit, and
right.
then you have an exit strategy.
Right, that 38, you see where the arrow is here. I mean, to alleviate this downside pressure as well, we're going to need to close above this for a couple of days and see where we go. Maybe consolidate, create a new base going to the upside where we were where we were down, consolidating as we were going down. So maybe that might be the case moving forward.
Home builders.
Yeah,
Build
love
your
it.
position.
I do like it.
You know?
Yeah.
Get what I said there?
Yeah,
Get the play on words?
I got it.
Let's move on to the final request, or I should call it the double request, Mark.
Nice.
Yeah. AudioCodes, AUDC.
Yes, and I'm shocked that we got a double request on this because I've seen this chart throughout, in passing, but actually a very interesting chart, very fun chart to actually do the technicals
It was
off
so
of.
much fun to look
Yeah,
at. So
it was
thank
great.
you, Y3Ken
Yes.
and Dan Drefke.
Yes, awesome request.
First glance, 100% momentum chart.
Yes.
The problem is with momentum charts, it's like a relationship. It's fun in the beginning,
Yes.
and then it can end real bad.
Yeah, I've seen that happen.
Let's look at our targets. Let's take a look through the chart. All right, so major consolidation.
Yeah, major consolidation pretty much throughout 2018, right?
Yeah.
Good 6 months, and then we had the big breakout on volume, right? And
Yeah, like I said, it's like a relationship.
Yeah.
That was the fight,
That was the
over
breakout.
someone didn't do the dishes.
Exactly.
All right, no, major breakout,
Right.
nice volume, and then, pulled back.
We started trending higher a little bit, right? Made some nice intra-week highs here, and then what happened? We started
Pulled back on some low volume.
Very low volume, which is a good thing. It's not something to be scared about, right? And then what happened here back in, we had another big breakout on heavy volume.
Yep, and this is a repetitive chart,
Yep.
would you say, Mark?
Yes.
Because look at that, pulled back again
Yep.
on low volume.
Absolutely.
Now we had another breakout yesterday, which I guess is why it was so popular.
Right. And again, a lot of the day traders, they scan for high volume breakouts. And that's where a lot of day trade momentum guys come in and they play the momentum. And that's what makes it really dangerous. So reason why is once they play that momentum and then the momentum stops and they want to get out, and everybody wants to get out because everybody's long. So it's a crowded trade, so to speak. But it doesn't mean you can't make money. Just you have to be cautious. I would never chase something like this at all. We do have our buy areas here, right?
We have our buy areas, the 13
Yep.
and the 12-15.
Yes, 13 and 12.15. Those are your two logical areas that I would actually consider if you are looking to buy, because it is that breakout. There is a gap in between here, so you do have some support. If that were to be lost, then you're looking at the 50-day moving average.
And then if that's to be lost,
Right.
and
And then you get the
fly
200.
through the 200,
Right.
which that will serve as nice support there, Mark.
Yeah, it's decent support. You're right.
Decent.
It's got a good gap area, right?
Exactly.
That's the original gap from early July. Now, what I'd like to see this happen is I'd like to see the stock pull back and make a higher low from the pivot low to swing low here back at the end of December.
Cool.
If that could happen and make a higher low maybe to the 50-day moving average, let it base a little bit and start to move higher, then I think you're going to have additional momentum to push this higher, even higher than where it is
Did you hear
today.
that, guys? It's all about the base.
It's all about the base.
All
And take a
right.
look at MACD RSI.
Yeah, MACD and RSI, hello. Hey.
Trending higher. I mean, it's a bullish chart. Don't get me wrong. Bullish chart, but it is overbought. Overbought is not a sell signal, and oversold isn't a buy signal. It's just telling you, use a little caution here. We're a little bit stretched.
Sometimes crazy can be fun, but it
Yeah,
can be dangerous.
yeah, absolutely.
Hey, you know what, Mark? I liked this talking technicals
Yeah.
today because we went over some stocks that
Yes.
day traders are looking at, long-term investors are looking at,
Absolutely.
a little bit of both.
A little bit of both.
It was cool.
Yeah, I did. I have a lot of fun. I enjoy doing this, and I keep the requests coming. I love this week's request.
Yes,
thank you,
you
everyone.
guys.
Really appreciate it.
All right, we're going to see you on next Talking Technicals.
Talking
Get your
technicals.
requests ready.